Hey, welcome to this week's video. One of the benefits of being an entrepreneur and owning your own business is being able to give your child the opportunity of not only earning some money, but learning what it is like to be an employee and have to work in a company. And one of the things that the government does is they give us the opportunity to be able to do this and to pay our child. And if your child is under the age of 18, it's a great opportunity also to take advantage of the tax strategies that the government gives you. And in this video, I'm going to walk you through that and exactly how you can do it. So let's get to work. So let's talk about the benefits of hiring your child that's 18 or under. Well, the first is, as I mentioned earlier, the wages are fully deductible by your business. The second is, as a sole proprietor, which means you file as a Schedule C filer with your personal tax return as a single member LLC or maybe as a spousal partnership, you and the child pay no payroll tax. As a S or a C corporation, you do pay payroll tax, but you still get to deduct the wages, so all is not lost. The good part is the child will pay zero income tax up to the federal standard deduction, which in 2021 is $12,550. And that means that you don't have to do any federal withholdings if you're paying them less than that amount. You could actually go beyond the standard deduction and pay up to a certain dollar amount that would include a traditional IRA. So you actually can write off even more, and not only that, but your child would pay zero income tax. So think about it this way. You're actually paying your child with pre-tax dollars because those dollars are never taxed. So it's a great benefit. Also, the other thing to consider is you can get the child in the habit of contributing to retirement. And another way to do that is through a Roth IRA, which, when they contribute, grows tax deferred. So it's a great way for the child to learn at a very young age how to save for retirement. So let's take an example. Let's say your child is 14 and you pay them $11,800 for the work that they've done in your business. You pocket $4,366 in savings if your tax bracket is the highest one of 37%. And you pay no payroll tax if you're an S or a C corporation. Also, your child pays zero in income tax and can put $6,000 into an IRA account, either a traditional or a Roth IRA account. So it's a great deal for not only your business, but also for your child as well. And you're giving them the benefit of learning what it's like to be an employee and actually have a job and earn some money. So some traps that you want to avoid in paying your child wages. Well, the first is you must pay your child through payroll or W-2 wage earner. You can't pay them as an independent contractor. And if you do, that makes it a lot worse because you would avoid the payroll taxes in some extent, but your child will have to pay the self-employment tax, which is not a very good option. So pay them through payroll. Also, make sure that the work is actual work that is done. Document this work, like tracking their time would be a good idea. And also pay them a market wage or a reasonable wage and document how you came up with that. That way, if you ever did get audited, you would have this information that would be available. The other thing is that the nasty kitty tax does not apply to earned income. It applies to unearned income, which is income such as interest and dividends. So that's a good thing here, that the income that your child earns is considered earned income and is not subject to the drastic kitty tax. So in summary, for entities other than an S or C corporation, your child can avoid federal income tax, and also you can avoid federal payroll tax. So it's a great deal. Also, consider the habit of contributing to retirement. I think that's really important for children to learn. The other thing is that while S or C corporations don't get the benefit of the no payroll taxes, you still get the deduction, so it's definitely worthwhile to put your child on payroll. So that's it for this week's video. If you got any value out of it, it'd be great if you hit that thumbs up. And if you're not a subscriber, it would be great to have you as a subscriber. So I'll catch you on the next one.